Hello everyone, this is Gaurang Somaya and welcome everyone to the Currency and Commodity Buzz. So we'll be covering the review of the month of July and the outlook for the month of August. And for more such updates, subscribe to our YouTube channel. Now talking about the domestic currency first, we have seen that Rupee in the last couple of months has been trading in this range of 81.80 and 82.80. There have been a lot of events which have uncovered in the last 1 month. We had three major central bank policy statements, and despite which we've seen the rupee kind of confined in this narrow range. It suggests that the RBI has been actively intervening and curbing the overall volatility that has been caused because of the global factors. We have seen the reserves rising to above that $600 billion mark. That is almost at a 15-month high. And in this month, we will be keeping our focus on the RBI policy statement. So here the central bank is expected to keep rates unchanged, but what their commentary or their stance is going ahead is going to be impacting the dollar rupee pair. Also the global factors in terms of the economic numbers is also likely to impact the currency. But yes, we expect that in this month as well, this range could held on, and only on a break of this range, we might see a clear trend coming in for the rupee. Now talking about the dollar index, we have seen that it has been trading with higher volatility in the last 1 month. It has been oscillating between that 99, 98 on the lower side, and on the higher side 103.50 has been acting as an important resistance. We had a few important economic numbers that came in this month in terms of the advanced GDP number. We had the durable goods number which was quite robust, and that has led to a bit of strength in the dollar index in the later part of this month. So we are expecting that this volatility is likely to remain high. We also had the FOMC policy statement wherein the central bank has decided to raise rates by 25 basis points, but it is expected now that there could be a pause in the next couple of meetings, and the central bank is likely to be data dependent, and which again is going to shift the focus from the policy statement to the economic numbers, and that will be important to watch out, and which is also likely to trigger that volatility as far as the dollar index is concerned. But yes, we expect that unless and until this 103.50, 104 mark is held on, the overall bias or the momentum for the dollar index will be slightly on the negative side. Now looking at the major crosses, we have seen that euro and pound too have been trading with a higher volatility. At the start of the month, they were trading with a positive bias, but in the later half, we did see some bit of profit booking coming in. We had three major central banks coming out with their policy statement. So as we discuss about the Fed, let's see what the ECB and the BOJ have done. So ECB too have decided to raise rates by 25 basis points. The BOJ have continued to keep rates unchanged. They have continued to maintain a very similar stance what they had in the previous meeting. And we did see a bit of impact coming in on the euro. We saw a bit of sell-off coming in the later part of the month, and we expect that this weakness could be restricted. Focus will be on the economic numbers that will be coming out from the Eurozone and the UK. So we have seen that manufacturing and services PMI number that came in later part of the month of July were quite disappointing, and if we do see a similar view, a similar stance in the month of August as well, we could see some bit of profit booking coming in. But overall, downside could be restricted and buying again could be seen from the lower levels. So our bias for the euro and pound is slightly on the positive side. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.